It's time to structure your business legally. Does this sound familiar? You earned your license, started selling real estate, and told yourself, if I'm successful, I'll get more strategic about the legal structure of my business. So, how's that going? If you haven't gotten around to putting systems in place to minimize legal risks and maximize tax benefits, no worries. I'm Ann Koontz, an attorney and CPA with Koontz & Associates in Sarasota. Let's take 5 minutes to discuss your options. Your choice of business form must take into account several different factors, based not only on the size and nature of your business, but also the legal relationships involved and the tax consequences. Though taxation is different for various types of business entities, be it sole proprietorship, partnership, or corporation, proper expense reporting, amortizing, and depreciating company assets can go a long way toward reducing your tax liabilities. While there are other choices, the most popular are to set up as a professional association, called a PA, or as a professional limited liability company, referred to as a PL or PLLC. Up until about 8 years ago, Florida law wouldn't allow a realtor to be an LLC, but now you can. One of the biggest mistakes I see is that a real estate professional will form a PA or PL, but never change their license with the Florida Real Estate Commission. Your commission checks from the broker will continue to come to your individual name, and you won't reap the legal or tax benefits of the PL or PA structure. Here are some common scenarios and what you can do to avoid issues. Scenario 1. You form a business, but you don't use it properly. You've gone to either sunbiz.org or hired a lawyer to form an entity, a PL or a PA, but then you don't use it. You're still being paid your commissions in your individual name until you apply with FREC and notify your broker. It needs to be on your business cards and your signs. Please don't stop after step 1. Finish the process. Don't make this mistake. If something happens, you're not protected from a liability standpoint. If you're not acting like a business, a court won't treat you like a business if something happens. When you form an entity, be sure, 1, to obtain a tax ID number for the LLC. 2, file an election for the LLC to be taxed as an S corporation. 3, change your name with FREC to the name of the LLC. 4, change your name with your brokerage to the name of the LLC to ensure that commission checks are being paid to the name of the LLC and commissions are being reported in the name of the LLC. 5, open a bank account for the LLC. Obtain a credit card or debit card in the name of the LLC if it's necessary to use the debit card from the LLC's bank account. Scenario 2, you form a business but don't tax it properly. 80% of the agents report their income on a Schedule C of their 1040. This is absolutely the best way to ensure you're paying the highest tax. There is an alternative. I recommend electing to be taxed as an S corporation. You will still be a PL, but taxed differently. Many agents don't know about this or think it's too cumbersome, but it isn't. You should still track your income and expenses regardless of the method of taxation that you elect. You have to form an entity to do this, but it can save you 7.65%, the employer portion of the employment tax. Another advantage of electing the S Corp treatment is that certain deductions are less interesting to IRS for audit purposes. For example, categories such as meals and entertainment, advertising, auto expenses, they're all high-risk categories that generally show as high dollar amounts for realtors. Then, and this is important, you must tell IRS how you want to be taxed. So the steps are: form an entity, either PL or PA, send application to FREC to move your license to that entity, then inform your broker of this change so they can pay your commission to your new entity. Next, file Form 2553 within 2.5 months of forming your entity to let IRS know how you want to be taxed. If you don't file this form and tell IRS how you want to be taxed, they'll disregard your entity and you'll still be filing on Schedule C of your 1040, which is exactly what you wanted to avoid. Finally, make sure you keep a separate business bank account and write all of your business expenses out of that account. Many times, people will use a personal account or the business account because one has more money in it at the time. Transfer the money first. If you have business expenses sitting in your personal account, It will be harder to capture them at year end. But even more worrisome is the liability issue. You set this company up to avoid liability. But if you're not following the corporate formalities, a court won't treat you as a business. By structuring your business correctly, you can save on taxes and keep more of your hard-earned commissions.